Good afternoon, everyone, and welcome to our webinar today. We are delighted to have one of our application consultants, Andrea Revisio. Andrea will be presenting on managing use tax in Business Central. And as a reminder, we are recording this webinar and we will post it to our on-demand webinar library for you to review again or share with anyone. And you can find our library under our resources tab on our website, and that's inovia.com. And we do encourage you to ask questions during our presentation, so please feel free to type them into the questions box and we will answer them at the end of our session. So now I'm going to turn it over to Andrea to kick off our presentation.
Hi, everyone. Thanks for joining today, or if you're listening later, thanks for listening later. We're here to talk about use tax and Business Central. So if for some reason you thought we were talking about something else, now's the time to go. Otherwise, we'll kick it off from there. Maybe. All right, I am your presenter today. I'm going to go off camera in just a second. I just at least want to say hi. I'm Andrea Riviezza. I am a CPA. I specialize in finance and accounting. And then just a little bit about me. I'm a big into the user groups. So if you're not part of the Doug user groups, actively encourage you to do that. They have some great conferences coming up and some great content out there, and local in your community as well, hopefully. I'm also an all-star winner from the user groups. And not to brag, but I am a weightlifter and I am placed second place for deadlift and squat in my age group at my local gym. So very, very proud of that. There, bench, I'm in third, not very good at bench. So yeah, that's my claim to fame. And now after that, we'll get into it. All right, what is use tax? So this is the first question we're going to answer today. What is it? So there is several types of tax out there. There is sales tax, which most people are the most familiar with, and that's going to be tax that you impose on a customer, and then you're going to remit it to the state by the seller. So you're going to tax somebody else, and then you're going to remit it, and these are states that you are nexus in. And then there's seller's use tax, which is what we're talking about today. This is tax posed on tangible personal property or things that are used in your business that are subject to use tax, which we're going to talk a little bit about what is subject to use tax and typically what is not. And these are things that you purchase that didn't have tax applied to them or correct tax applied to them. So if you live someplace that doesn't charge tax, and you bring it into a state that does charge tax, that is when that is liable. So this is things that you purchase, not things that you sell. And then there's something called consumption tax. And I think I just like to pop this in there to kind of scare people because most people aren't doing this. So this is tax levied on goods or service consumed mostly. So I don't know, I put purchase in there. But if you take something out of your inventory and you say you blow it up or you test it and you're never going to sell it again, technically speaking, you're supposed to have tax on that, sales tax on that, and apply it to your tax returns. I don't think a lot of people do consumption tax, but I do like to throw it in there as a possible other tax that you might be incurring that you didn't even know. All right, and I'm just going to throw out a big caution real quick. So if you're just going to go gunslinging and start applying use tax all the places that you are nexus or have a physical location that you buy things into, watch out, because use tax is not applicable in all states, jurisdictions, counties, parish, or cities. Sometimes it might even just be that your state requires use tax, but the city that you live in and the jurisdiction does not. So I would say this is a gray area in tax, and you definitely want to know what you need to actually tax. And I can't answer that for you. So if you're like, I live in Baton Rouge, Louisiana, do I apply use tax? I don't know. You definitely want to read your local laws and governances there. All right, so things that are typically not subject to use tax. If it is purchased to consume as part of your final product. So if you are making chocolate bars and you buy cocoa beans, those cocoa beans will become chocolates. And therefore, at some point, somebody's going to buy this chocolate bar and pay tax. So you don't have to pay tax on the cocoa beans. But if it's an item that you use to make the product, so obviously you'll need some gloves and work boots and tubings and a hairnets and stuff like that, that is actually typically a taxable thing because you don't put gloves in your cocoa bean chocolate bars, right? So the gloves are not taxable by the sugar and the cocoa beans are not taxable. And then also if it just already has its proper tax applied, there's nothing else you need to do. It has tax already on it. They've charged you sales tax, so you don't have to pay any more tax. Now let's look at the things that are typically taxed. So as I said before, those things that you're going to use in production of your item, but maybe is not actually part of that final item. Things consumed by the company. Once again, that's kind of consumption tax, but consumed items. And this could even be like food that you bought for your company. If it's consumed in the company and it's food, it's subject to tax. Things that are purchased online that maybe just didn't get taxed when they were sold. Manufacturing equipment. There are some exemptions for manufacturing equipment. I will say it's also city dependent too. So like the city of Boulder, if you buy, let's say a piece of farm equipment, they make you pay tax on that. Even if you're going to use it to harvest your products and it's this big investment, they're going to make you pay tax. While the city of Denver, on the other hand, does not make you pay tax on that manufacturing equipment because they assume you need this to make your product so that you can eventually collect tax. So there is differences in the cities on these equipments, and even sometimes farm equipment in one place is different than, let's say, a pill maker in another place. So it is law specific. So that's what I'm saying. You really have to understand the law in your county. But in general, manufacturing equipment that is purchased is taxable. Um, then items purchased and delivered to one jurisdiction and put in service in another jurisdiction. So once again, if you buy a fixed asset in Denver, generally speaking, that manufacturing equipment is not taxed. But if I was then to move it into service in Boulder, so let's say that's 5 years later, I put it into service in Boulder, I actually owe tax to the city of Boulder for moving that there. Boulder will audit you. They will find that piece of equipment and they will find you did not pay any sales tax on it. So now you owe use tax. Generally, anything that's interstate is taxed. So a lot of people will cross borders into like the Washington-Oregon border. They'll purchase it in a non-taxable location, drive it across the border, thinking, hey, I'm getting a good deal. Technically speaking, you should be paying use tax on that. And then just other things like supply items that have been untaxed or undertaxed. All right, look, there's even more, guys. We're not done. We're not done. I think I kind of get a little repetitive, but basically TPP as well, general personal property. So I'm talking computers here. Um, then other purchases made by the company that don't flow through normal accounts payable. So think about that it's online transactions, credit card transactions. You're supposed to pay for this all with use tax if you didn't get charged sales tax. Same thing with office equipments. And once again, those things that are withdrawn from your inventory. Those should all be part of taxes. Lots of tax. So basically anything that didn't already get taxed or taxed properly or that you're not putting into your goods, right? That's the thing, right? It's fun. And then as far as the rates go, it's normally the same as a sales tax rate for the area. So if your sales tax rate for your county is 8.5%, chances are that is also going to be your use tax rate. Now you do want to confirm that because as I said, sometimes they might not even charge you use tax. And then sometimes if you do both sales and use tax, which is you'll see those distinctions, especially if you have a taxing software for your sales tax, you'll normally see something that just says sales tax or sales and use tax. And sometimes if you're doing sales and use tax, there's actually a lower rate that is applied to both of those. So you just want to understand those tax implications of what you really need to do to find these tax rates and what you're actually going to apply them on. And now that you're really confused, let's set this bad boy up. All right, so getting started, I'm going to show you guys a demo in here in a second. But the good news is if you've ever set up sales tax in BC using the BC or NAV functionality, because it's about the same in both programs, but that's only in NAV 2016 and later that they have use tax. So if you're still on like 2013, you can't set up use tax in it. But if you're on 2016, I believe it is, and later, you can set this up. All the screens are the exact same, but it is the same setup and process flow as sales tax. And what you're really looking for is who are you collecting tax for, which tax jurisdictions slash areas, what are the tax rates, which we'll do in the tax detail screens, and then you can pre-select vendors for what are they tax liable for, so that's on the vendor card. That last step is not required. So there might be vendors that you just say, hey, every time I get them for them, they're not nexus in my state, but I do owe them tax every single time. You can set up their vendor card to reflect that. Otherwise, you don't have to. You can do it on a by order basis. All right, so let's get into a Kronos environment. Very exciting. So we are just in the standard Kronos. You're not looking at anything exciting that's anyone's personal information here. And we are going to start out in our tax jurisdictions. All right, so you'll see Kronos already has a few set up, but we are just going to set up a new one. And we're going to call this guy Denver. And if you're like, why Denver? It's because I live in Denver. That's why. So now, as far as these accounts go, what you're looking for is where should these map on your balance sheet? So these are a liability to the state. And right now, we're just setting up that liability side of it. And I'll explain the expense side here in a few moments. But we're just for this moment going to talk about where should these map to. So for Kronos environment, there's only one account, which is this sales tax payable. And that we're going to also revert our purchases there too. So sometimes you will see two accounts for those, one for sales tax and one for purchases. I will say there's a little bit of risk there. Oftentimes when these are paid, they're paid out of the same thing. So when you remit to the state your sales tax on that quarterly, monthly, annual basis, depending on your setup with that state, you're also remitting to them use tax at that time. So if you have two accounts, your AP person is really going to has to know how to split these accounts up, like how much of it goes to sales tax and how much of it goes to use tax when they're paying this liability out on the invoice. So sometimes it's just easier to have one account versus two. As far as reconciliation, it might just be as better to have two. So it really is a preference here. So I'm going to do Denver. I'm going to do state of Colorado. I did that really weird. Sorry, guys. Live demos. That's the time to mess up for sure. All right, state of Colorado. Denver also has a special. That's an RTD. So this is special tax. Do you have to separate special tax from Colorado or actually technically from Denver because it's not applicable everywhere? No, just for the sake of this, I'm going to do it just so that you can see how all of these work out and play together in the next area. And then we're going to do Denver County. So these four all go together, and we're going to show you how to push all these together in the next screen. So you're really not doing anything else here. The one thing I miss is where do these report to? And for me, all of these are going to go to the state of Colorado. You can also say the reporting entity is itself if you're reporting these differently. Oftentimes, for most places, it's one return. So if I'm going to remit Denver tax, I'm going to remit it to the state of Colorado, and then the state of Colorado or remit it to its cities and its counties or its specialty taxing divisions. So sometimes people don't even care. They just put it in one. Other places, they require a separate return for each county. And in that case, the reporting jurisdiction is probably not the state, it's probably actually that county that is required. So that is a setup. Oftentimes, I don't think this is a huge deal. It just helps you out on the reporting on the back end side. So that's tax jurisdiction, and that's going to lead me into my tax areas. So what the sales tax areas are is pushing all of these things together, like in which way. So if we were to look at Atlanta here, it's Georgia. It's the city of Atlanta and it's Fulton County. So we're going to do the exact same setup. We're just going to call this Denver, Colorado. And the reason you can do this is because maybe you're not just in Denver, maybe you're also in Broomfield, and maybe you're in Fed Heights, or maybe you're also in Boulder, and you can reuse some of these taxes then, right? Like you can reuse Colorado. You don't have to build out more Colorados or more special tax if that applies to like every single area you're setting up in Colorado. You only need the one. So that's why most people separate them out like I did. But as I said, it is not massive if you don't separate them out. All right, so now we're going to select. We got Colorado. We don't need a calculation order. It all is fine to calculate together. And we're going to pick up that RTD. All right, so we have now set up our tax area. So if I select Denver, Colorado on a purchase order, which I'll show you guys, it will calculate all of these taxes and we don't have to worry about them. But maybe RTD goes away at some point. We can now take it off of our tax area, but leave it inside of our tax jurisdictions. And if I'm going too fast, I don't know, maybe throw that in the chat, because honestly, guys, I can talk very fast. I'm trying to be slow right now. So I hope in a way I'm kind of going slow. But if for some reason you're like, I am not following, she's going so fast, do let me know. All right. Let's see, where am I going next with this? All right. I like to get lost sometimes in my own mind here. All right, now we got to set up these tax rates. We're going to go to tax details. So I always search for everything. If you like to navigate differently in your system, that's fine. But I am just going to go to tax details here. So we actually need a new tax group code. I did forget about that. They already have it set up. Okay. So I'm just going to show you guys really quick. Tax group codes. This is where those codes go first. So you have to make a tax group code for what you want to do. Typically, I use supplies when I am doing a use tax setup. So I say supplies. You can also say materials if you wanted to, but obviously on this example, they're saying taxable raw materials or some other word that makes sense for your accounting team, because the AP people are going to have to pick it up. So in my terms, I'm just going to use the word supplies. So that's why I didn't just jump to a tax group code, because I already have a tax group code. Realistically, these setups are just a name and a description. There is no further things related in this screen. So it's just that tax group code. But you'll see that it already kind of generated some things for me, right? It's already saying Colorado here, tax group code non-taxable or known if it's not used, right? These are pretty much used for sales tax instead of use tax, because you'll see that word supplies is not anywhere. So we're just going to pop in the new one. We're going to say Colorado. And we're going to use that supplies group type. The sales and use tax is good. If you want it to be only use tax, you can do that. Or you can say if it's only sales tax, so especially if they have those different rates. In this case, we could say use tax only. It's not going to impact this, but yeah, I'm just going to leave it as that. Then you can put an effective date. So typically speaking, sales tax rates change annually. It's not always the case. Some change them a little faster than that. And sometimes they might just have that rate for like ages, but you can put different ones in here. So I could have one starting 1/1/2020, and then I have another line starting 1/1/2021 or 2022. And if it changes during the period, so like let's say you received it in one period, but you posted it in the other, it will update it to that post it period. So in my case, since this is just the rate we're going to use, we're going to put 1/1/2022 and make that rate the rate. Now I got to remember what all the Colorado rates are, so I'm just going to look that up. You can look that up online. As I said, that oftentimes the tax rate could be a little bit different, but in our case, it's not going to be that different. Here is our Denver tax rate. So you can see the tax rate is 2.9. This total is 8.8 for the city. Sometimes I like to do really stupid math on this and accidentally do more than what is required, but we're just going to go with this. So the state of Colorado is a 2.9 tax rate. So I am just going to enter 2.9. It is not 0.29 or 2.9%. You're just saying 2.9. That is the percentage, 2.9. All right, so now I'm going to add in the city of Denver. Also supplies, 1/1/2022 start date. The tax rate there should be 4.75. Now, obviously, if you're doing this for your setup, make sure your tax rates are correct. I am just going to mess around and just put in what I think the tax rates are. Trying to translate this while on the call. All right, I know that's 1.1, and then that leaves me with Denver County. And then also, since I set it up this way, if one of these rates change, let's just say the Colorado rate changes, I can just fix Colorado without having to fix anything else up in setups. And then everybody I have in Colorado is going to update as well. So that's the benefit of separating out each component, is you can dictate that component's tax rate individually. So if something were to change, you don't have to update that. So I think that's like 2.5%. That's probably not 8.81. I'm not going to worry about that. I think I'm a little for, yeah, it's probably 1.5. It's the county. So I'm not going to worry about it. For example, it doesn't really matter because I'm not actually trying to set up Denver in my Kronos database. In real life, to actually use it in real life, you definitely want to have these narrowed down to the T. You better have 8.81%. Otherwise, you are just going to get audited, or you might be paying more in tax than you should. All right. So now we have the tax. Sometimes there is things like maximum amount of tax or minimums. That's very rare, so I would not expect to see that. So I would ignore that part. All right, so then there's purchase and payable setup. There is use vendor's tax area code. You do want to turn that bad boy on to actually use your use tax. All right. Let's see, I think I'm going back to my slides now. We set all these things up. The purchases and payables setup, use vendor tax. We talked about our tax jurisdictions, the who and what GL counts, the tax areas, the combining of all these tax jurisdictions, the cities plus states. And if you live in Louisiana, your pariships. We did the purchase and payable setup, the tax group codes. That was that supplies, which I almost brushed that part over. And then I was like, oh yeah, I gotta talk about this. And then tax detail setup. So that is where you're actually going to pull in the rates. All right, using. And now, if you're not on TikTok, this song probably didn't pop up in your head, but I thought it was funny. So you get a little TikTok reference here. All right, so we're going to look at purchase invoices, vendor ledger entries, and the tax collected reports. Back into Kronos. All right. Let's go to a purchase order. It does work on purchase invoices only as well. So if you need to make a purchase invoice, that's totally fine. All right, I'm just going to select a vendor at random here. They are in not Denver, so that's going to be fun. All right, we're going to change that up in a minute. All right, well, let's change my posting date to today to get it all up there. So they're not technically, yeah, they're not in Denver, but I'm saying I'm in Denver. So that's why we're going to do it. To Denver, technically speaking, the default company address should be Denver to make this all go out correctly. And oftentimes you don't see these on items, right? It might be an item because you might be putting raw goods into items. So like, let's say you itemize your gloves. And as I said, gloves need tax on them. But generally speaking, I see a lot more of these with GL accounts, right? You purchase some equipment or you purchase some office supplies. If it's not a fixed asset, you are going to see these in these GL accounts. So that's why I'm going to go here to this account 61400, and I'm going to say we are just buying some office equipment at 200. What did it not like? Is that not an option? It is not. Let's just go with box. Interesting. All right. So you'll see right away it says tax area code Atlanta and tax group code non-taxable. And you'll also see there's some things missing from our screen. So we're going to add those really quick using a personalization. And on the lines, and I want it back over here. I'm going to add my fields. All right, we are looking for tax liable. And we're going to do use tax as well. Oh, no, come over here. Ah, we're fresh building this together, guys, because I wanted you to see this. See me struggle. All right, so I'm going to be done personalizing there. I'm going to select the tax group code to be Denver because that's the tax that I want on it. I need the tax group code to say supplies, and I'm going to do use tax. So in order for this to get tax, you need the proper tax area code that you're trying to apply the tax for, the use tax flag, the tax liable flag, and the proper tax group code. If you leave non-taxable, it's not going to calculate any tax. If you put in a different one that's on here, like labor, it might also collect a different tax. Now, I will warn, this happened a lot more in NAV than I have seen anyone happen in BC. If you partially set this up, it will take out your purchase order and purchase invoice screen. So if you are missing like a flag, let's say the tax liable flag, and you click out of this, it could lock up all your orders. So what I'm saying is if you are going to do use tax on an order, commit to that order, right? Make sure all 4 of these are filled out, because if it's partially filled out or it is like conflicting information, the system is going to get confused and lock down your purchase orders and purchase invoices. And the only way out is having a developer fix it on the back end. So to avoid that drama, just make sure you have this all filled out. And that's what I was saying before. You could do it on the vendor card. You could set up these tax area codes, that tax liable, and all of that information so it pulls over with the header, and I'll have these lines already filled out. The only reason I'm like, sometimes that can be risky is because of that lockout. So in this case, you can see that it's all set up. We have our use tax, our flags, and it doesn't show anything. I think for a moment it did kind of show that we have like 205 down there. Unlike sales tax, which is driven off of your shipping addresses and information, this one is really just driven off of where you select for it to go. But just like sales tax, it only triggers on things like posting, releasing, and using statistics. So if we release this now, we should be able to get our tax in there. Of course not. Of course, it doesn't work for me, so we're just going to post it up because that is probably where we're going to see it. Oh, and I forgot to enter the document number. All right, now we're gonna post it. And then we're gonna go into that posting so you can see where everything went to. So we should be able to see our tax on the order. Did this not put any tax on the order? Did I forget to do something? No, this has tax. Okay, it had tax. Whew, it was trying to scare me for a hot second, but it has tax. All right. So what we're going to see is there are AP account is only hitting for the 2,000 because we are not remitting this tax to the vendor, right? This is something we're remitting to our state ourselves. And now you can see all these taxes here. It's probably a little bit over the 8.1 because I wasn't really paying attention to my rates. I was just kind of entering them. But you could see it separated them out by type. So you have all your 20600, that's your sales tax payable account. And you can see that it has various breakouts here. To order $205 of tax, and you'll see it all went to that expense account, right? So that's why you don't set up the expense account, because the expense account that it selects will be the same one that is on that line. So if this is like an item, it's going to apply it to the item. If it is a GL account, a resource, whatever, it is all going to select the same account as that line item. If you have multiples on the order, so let's say you have a line that doesn't incur use tax and one that does, you can do that as well. Just make the one line tax liable and the other line not tax liable, but you can't mix it. So if like half of it on this 6-1, that line is taxable and the other half's not, it's gonna have to be two lines. It can't like switch it. It has to be able to calculate this whole tax. So this was the posting setup that we were expecting. We have our liability to the vendor the same, the liability to the state now, and then the expense out for the full amount on our income statement, because that is a cost as incurred. It's both sides, right? Like why sales tax is always one side, it's like a liability if you are the person applying the sales tax, or it's just a cost of your good, right? So think about it that way. It's just a cost of your good to have that use tax or sales tax applied. All right, beautiful. It just didn't show it here, so that concerned me for a hot second. But that is exactly what we were expecting it for. And now I think we're gonna move into reporting out on that tax. Ah, I lost my mouse. Just a second. Oh my gosh. It's always a scary moment. Okay, so now that is how you use it, right? It's applied there. So now we want to get this information out. How are we going to report this to the states, right? There are these sales tax collector reports, and you're probably thinking, Andrea, I thought you said this was use tax. It all goes to the same things. So we're looking for this sales tax collected report. We can put in our date filters if we want to. So I can say this is for this month. I'm just gonna go with this date. You could do different things like, hey, I'm looking for the Colorado ones, or I'm looking for these jurisdictions, or I am looking just for the ones that are supplies, because maybe you don't want everything to report out. If you have anything else, otherwise you could kind of leave these open, but I would definitely recommend date filtering it. And we are just gonna preview this, and our order should be on here. I said should, maybe I posted this to the wrong period. Period did that go to? I'm just going to wipe this guy out so we can see the report. All right, not on there. What happened to our report? Oh, I forgot the word include purchases, include use tax. It's always helpful to click all your buttons and not just some of your buttons. There we go. I love demos that are live versus screenshots, because that's where you're going to have the fun of not remembering to click something. All right. So now you can see I have Colorado, I have Denver, Denver Rec, and RTD. You can see the taxable sales amount and then how much tax was on this. Now, I will say sometimes it's variance tax. You can do that, right? So you could say, hey, the difference between Denver and Boulder is 1%, and I'm supposed to pay Boulder that 1% higher. And you could do that 1%. But generally speaking, when you remit to the state, you're saying it's a taxable sale of $2,000 that I owe to Boulder. And what Boulder is going to do is say, okay, well, then you owe me that full like 9.5 tax rate versus the 8.5 tax rate. It doesn't really work the other way. If you overpay and use tax, that's kind of on you, right? According to the states. But if you underpay, you do owe them that difference. But unfortunately, it will look something like this, where that taxable sales amount is that full amount, and then what you're trying to remit is the full amount. the reporting gets very interesting for variance taxing. So this is kind of what you're looking for. So then if I owe Colorado on the monthly, I would pull this and I would say, hey, I have taxable sales of $2,000 for the city of Denver, and then that 205 should align with their 205 as long as you set up your rates correctly. So that's how you would pull those, and you'll see my other jurisdictions are empty because I just didn't have any examples that were pulling that. And if we had sales tax on here too, it would actually separate those two, one being sales. And if I were to say that Denver was its own jurisdiction, it would actually just pop on to its own page with sums of all those different jurisdictions. But since it's not a big deal, since all of these are going to go up to the state of Colorado, it doesn't really matter that if I separate these out or not. It's fine to kind of have them all in this one lumping. Okay, so that was reporting. So we talked about purchase invoices, making sure you got all those like flags going on, the vendor ledger entries, we looked at that, and then we looked at the sales tax collector report. Now there is different little cool things you can do in the system. What this little mapping is trying to show you, like, hey, if you use the tax liable flag but not the use tax liable flag, then it will actually apply the use tax to the vendor. So if the vendor did apply tax and you want to capture that tax, you can say, hey, yes, and then it will say you owe the vendor 109, but it took that tax as 9. Now, I will say, because I am paranoid about that little flag, I don't like doing that. Generally speaking, if you paid sales tax, I like to do it the cheat way. And I will just show you that really quick because I find this to be easier. So this is an item. It's probably not our best, but what I would probably do is keep it with that item. I'm going to do a non-item one because that one's going to probably mess me up. Do I have a non-item one? No. Okay. I'll just make a new one. All right. So this is an example where they've already paid tax, right? We're going to go back to that office equipment one that we used earlier. I forgot this says like weird things in here. Maybe we don't need it. Okay. So if they've already put tax on and it's not part of this 200, I would come back down here and I would say sales tax on office supplies or some other description so that you know that that's what it was, and then also put in that tax here. So if it was like 250 like the other one, I would put that here. And the reason I am saying to do this, that this gets you to that same result that we saw before, but in this scenario, this is 100%, and I think I had it as 2,000, that's why that math's not working out. In this scenario, that's the same amount of tax, right? It was 2,205. I'm still calling it out as Denver. So if I get audited, I can easily see that, hey, this has sales tax on it. I don't even have to look at the invoice. I know I applied sales tax. I know it's a proper sales tax. It's on its own line and it was in this amount. But I owe it to the vendor because the vendor is applying sales tax on the order. And so that's what that is. So I owe them the 2,250. Why in the use tax example and what I originally showed you guys, I didn't owe the vendor that. I only owed the vendor $2,000. In this case, I owe them the $2,200, but I want to call out that sales tax to make it easy to find on audit purposes. So this is what this is trying to do for you too. Like, hey, you could do it that way too, where you owe them. I don't find this as clean or easy to use, so I prefer to do it as its own line. And then obviously if you have nothing marked, it's not going to do anything. So these are just the different scenarios of what you could do. All right, and now I made a little decision tree for our AR, or I guess it says AR, but technically it's AP. I don't know, I have AI there. So if AP receives an invoice and they review it, what they should be asking themselves, this is not a use taxable item, was sales tax applied? And if the answer is no, then guess what? They're done, right? It's not taxable, there's no tax. If the answer is yes to this, honestly, I recommend that you push back on the vendor. They're probably missing something like your tax exemption certificate that says that you don't need to pay tax on this, or maybe there's an error. You can technically get refunds from the state, but let me tell you, if you want to audit risk, ask for some refunds from the state on these things. So it's probably just better that you push back first and see if you can get the tax removed from the invoice. Now, if AP, on the other hand, gets an invoice and it is a use taxable item, they're going to look to see if tax was applied properly. So properly doesn't just mean was it there. It means was it there at the correct rate. And if it is on there, they did apply sales tax to that invoice, then you don't need to do anything else. I only recommend that breakout just to make it easier for you later on. And if the answer is no, it's taxable and it's not applied or applied properly, that's when you're going to use all these little flags that I'm talking about and the setups, and that then you remit that to the state at month end or quarter end, or the great state of Wisconsin in their annual returns. So whenever it's due is when you are going to do these use tax, and you're going to put it to however you're doing it. If you have a software that you use, an ISV that does your sales tax, you can put your use tax in there. If you are doing it by hand, you would just add it to that return as well. I will warn you, they do audit on use tax. So if you are in use taxable area, you are at audit risk. So it is very crucial that you have this done properly. In the old ways, in like the 2013 days, either you had to make a bunch of lines for like ins and outs and kind of cheat the system, or you had to print all your invoices that you owed tax on, but wasn't there, and make journal entries. And I would say that process got pretty messy. So it's really nice now that it's in this system. It's not that complicated. I'm sure at first glance it's a little like, oh my gosh, but it's not too bad. It's not too bad. All right. So we're going to talk questions now. Is there any questions in the chat, or if anyone wants to come off a mute?
Thank you, Andrea. No questions have come through yet. Now's the time to get your questions in so that we can get them addressed from Andrea. So please go ahead and get those in.
All right. That means I probably did an amazing job and you all are very impressed. You're welcome.
You did an amazing job, Andrea. That was
I was like,
very...
oh gosh, why did that look like I expected? I like to do that on demos, is freak out for a brief moment. So sometimes I just PowerPoint to death. And I was like, live demos, scary. All right. And also, if you're interested in this great topic of EFTs/ACHs, depending on your regional dialect, I have another webinar coming up Wednesday, September 28th. It's at 1 to 2 p.m. Central Time. For your little Mountain Standard people, that's noon. So it's the same time as this one, but it's going to be on EFT. I'll probably do the same silly things where I click around a little bit and be like, oh, yeah, I know what I'm talking about. I'm an old pro at this. So hopefully you guys can join me. There's also a lot of other great webinars that Anovia is presenting on, so definitely check back. It's a great benefit. And then we got these guys. So yeah, I think that's all I had. Angie, I'll turn it over to you.
All right, thank you, Andrea. And on Andrea's future webinar on September 28th, we don't have that up just yet, but we will have that up this week. So be watching our website for our updated events page to show that information updated. So yes, so thank you, Andrea, for presenting, and everyone who is on the webinar today, thank you for taking the time out to join us, or if you're watching on demand, thank you for taking the time as well. And as Andrea mentioned, we do have more of our upcoming events, so just be sure to check back later at inovia.com/events for Andrea's updated webinar on September 28th. And also check out our training workshop page. That's novia.com/workshops. We have a variety of workshops to fit your role, so check out the one that is right for you and your team. And if you haven't heard our latest Innovia Conversation podcast with Steve and Jeff, we have a library of podcast episodes for you to listen to. So you can learn more on that on our website, and that's innovia.com/podcast. So browse our selection and subscribe so you'll get notified when those new episodes air.
They haven't invited me onto this yet, so it's very upsetting.
I'm sure you are on the list at some point. They have um, a lot of selection to go through first.
Yes, yes.
And don't forget to check out our conference page, innovia.com/conferences. We will be attending Dynamics Con Live in San Antonio, Texas in September. So make sure you read up on the details and register today with that special discount code that is on our page. All right, well, thank you again, everyone, for joining us, and we look forward to seeing you soon on another Innovia webinar. Take care, everyone. Thank you, Andrea.
Thank you. Have a great one.
You too.